absolutely.
Here she comes.
Thank you so much.
Here she is, the princess. Right there.
You too. Bye.
Our African queen. Here to unite us all and show us all how it was in your hair. And show, hey baby. Well, she is. No, girl, no, she is. Will you please let them know I'm not being racist when I see that, and I have them please understand where you come from.
Oh my God, I didn't say you were being racist.
Child,
I'm an African prince.
She's actually from Africa. Yeah, there's a difference.
So she's the real African American.
Yeah, that's why I said she's the real African American.
So wait, can I ask you a question?
Oh, Jesus.
Would you consider me African American, or would you just consider me black?
It's a personal preference. We've discovered this.
I can't hear her.
You're muted, honey. Unmute yourself. Yeah, we can't hear a damn thing you're saying.
I've been saying all this. I've been talking to myself this whole time. No, you are African American. You have African origins, but there is a difference of, being born in Africa and then, and being born here. But you still have the same roots. You probably just don't speak languages that we speak, but you have that.
Don't get me wrong. I do come from a black mixed family, but like my background, but I still consider myself black, just as black as you.
You can call yourself an African prince. I do not have a problem with that.
Right, I go by Prince Charming on social media.
That's too funny. As Jacob gives him this.
But we're back talking about. Oh Jesus!
Jacob can be a European prince.
Well, honey, why do I want to be a prince when I can be a queen? Anyway,
right.
So speaking of queens, here comes Bo. Yeah, that's gonna be funny when he replays that later. Okay, so this is what hi everybody, welcome. I'm gonna start streaming this on Facebook. So I know people are actually interested. Emily, we're getting a lot of interest in our stock trading.
Are you?
And I saw you posted some stuff on Investor Party.
I did. I posted on my social media platform, so I figured why not just post it there as well. I mean, it's I might as well, so you guys can start to see what I'm doing. So
shameless plug, honey. Shameless plug every day. Twice on Sunday if you can do it. Let's do this. But no, people are really getting interested in this stock trading. So
I'm glad.
Stock basics, options, and
hi, Bo.
Paper trade.
Can you hear me?
Yes, he can hear you. He's just we can't hear anybody else. But I don't think that okay. And paper trading.
Wait, who said hi? Sorry, the screen wasn't up.
That's okay. We can still see you.
I'm in slow motion.
Well, that's because we have a poor internet connection. Okay, so we're going live on Facebook, and we're going to get this happening, and with Emily Murray. Muiruri. God damn it.
Get it right.
There we go. And I just copy and paste it here. Okay, so now, boom. Hello, everybody. How are you? You ready for another great day? Look, you guys notice we've got Derek and Elise together. Yeah. So, I'm so glad to see everybody together right now. It's wonderful to have all of you on again. And then, of course, Derek, I feel like I'm with you right now. Matthew smells like he just got done smoking an entire joint himself.
I do.
Bitch. Clearly, I'm not.
No,
high.
I don't.
I can. It's Allie. We're not talking about this stuff, but I'm just making a joke. Anyway, Derek, it's good to see you. And so everybody on Facebook, welcome. If you want to join the party, go to investorparty.com. You can sign up there. You can go to our group page here on Facebook at Investor Party, or you can just watch live, but you won't be able to get as much participation. And what we're doing now to get everybody on the same page, so we all
yeah. Cool. Thank you, sir.
Mute. What we're doing now to get people moving forward, we've had a lot of requests about what is stock trading. Now, we do a lot of talk about real estate and investing here. We also talk about personal development, and every Friday we have our Friday market recap with Emily. She comes and talks about what is going on in the stock market, and we try to speculate why it is such a unique animal that has its own rules. And I'll stop there, but Emily, you'll take on for that. But as you guys have, if you have been paying attention, you can see the stock market is just continuing to climb and climb. And climb, even though our economy is officially in a recession. It's so amazing. So we need to learn how to trade and do this in a responsible way to where we are not sacrificing our integrity and our investing. Hey! So we are now going to be learning our basics from Emily today. Emily, by the way, if you do not know this woman, you need to. Go friend her on Facebook, follow her on social media. Everything she posts makes me feel warm and fuzzy inside. So Emily, thank you for coming on.
You're a mess. Hi, how are you? How's everybody doing?
We all know this, but we don't say it. Anyway. So what we're doing now is Emily has agreed to create a stock platform, a stock trading for us on Investor Party. And we are trying to get feedback so people know what's going on and start seeing what's going on. Now, Matthew is going to be learning how to trade with her. So let's go ahead and introduce Matthew so you can see her protege.
Protege.
Yeah.
Hello, everyone.
So how many of you guys are currently trading in the stock market? Like on your own, not through a broker? Okay, we got one. Perfect. Good. And we're not counting Emily, she's the teacher. Okay, good. So what we're gonna do, we're gonna talk about today why you should be taking control of that yourself. And if you're not, what to tell your broker, right? And then how to go about doing it, how to go about trading. So basic financial education goes a long way here. So Emily, what would you tell people? And like we're talking to someone like this right now, right? What would you tell someone like this how to get started in trading when they have no money, no life experience, no common sense, anything like that?
All right. Well, before I get into that, I always kind of like to kind of go back to the foundation as to why, why people choose the route that they choose to earn an income, generate wealth and all that stuff, right? So all of you guys, and I'm pretty sure everybody here has kind of heard about the quadrant, right? The 4 ways to make money. You can either be an employee, you can be self-employed, you can have a business, or you can be an investor, right? Everybody's kind of heard of that.
Let's talk about
right?
it.
Okay, well, let's talk a little bit about it. All right, so there's basically 4 ways to make money. And we kind of call it the left side and the right side, right? So on the left side, you have the employee who has to go get a job and exchanges their time for money. You have the self-employed person who has, I call it like a due income, right? They have to do it to get paid. So, your dentist, your doctor, your accountants, your real estate agents, pretty much, the gig workers, right? Uber drivers, that kind of stuff, right? So the left side, has to earn their income actively. So they have to do something to get paid. Okay, and there are advantages and disadvantages on on everything, but I like to categorize the left side and the right side and just kind of talk about those two different sides. So the employee and the self-employed individuals have to actively do something to earn that income. Okay, typically they're the highest tax bracket, right? So and they pay taxes on the income earned, and then they deduct their expenses. Right, and then you have people, the left side, their liabilities take away from their income. So they have a lot of liabilities, and then the liabilities take away from their income. They typically have one source of income. So if you have a job, that's your one sole source of income. If you are a dentist, that's your one sole source of income. If you're a doctor, same thing. If you're, a hairdresser, same thing. So you have just one stream, in most cases, just one stream of income. And, if you didn't know this before, you certainly know this now, just based on what's happening right now with the pandemic. Most of the people on this category, they're on the left side, right? The population of people is on this side of the quadrant, on the left side. But the wealth is not on the left side. It has the most population, about 90%, but only 10% of the wealth is on the left side. Okay, and these people, we work hard. We go to work. We do what we're supposed to do. You can see that they're the essential workers right now. They're the ones that are out there risking their lives for everybody else, right? So, but yet, when it comes to the piece of the pie, when it comes to wealth, they only have about 10% of that. Then you switch it over to the right side of things, where you have the business owner and the investor, right? So the business owner typically will have like a system. I usually like to compare like a McDonald's, like somebody who goes and buys a McDonald's franchise, right? They buy into the system of McDonald's, so they know how the fries are made and how the, how they cook the burgers, and it's that system that they buy into, and they'll always have like that cash cow coming in from that franchise that they have, right? And they have a system and they can employ other people to do the work, and they don't have to be there to actively work, right? The investor is the same way. The investor has their money working for them. So again, they don't have to be there. They don't have to actively do something to earn income. They did something in the past that now generates them that income, right? So the right side of the quadrant, you have people who make their income passively. They don't have to actively be somewhere to do something. They do it if they choose to, but they don't have to be. They deduct their expenses and then pay taxes on the income that's left. They have assets that produce cash flow, right, to pay for their liability. So a business owner or an investor will purchase a vehicle and deduct it from their business. So it's a liability towards their business and those types of things, right? They typically have multiple streams of income. They don't just have that one thing coming in. Now, this side of the quadrant, this is the side that has the lesser population. It's about 10% of the population, but the wealth is here. The majority of the wealth is on this side. So when you look at those categories, you have to ask yourself, well, which side do I want to be? Well, obviously everybody wants to be on the right side, and there's nothing wrong with any of those quadrants. The question is always, how much money do you have left at the end of the day, right? It's not how much you earn, it's what you keep. And then what you do with what you keep is what you keep growing. Is it compounding? Is it in places where it's, assets that are growing and giving you more dividends, for example, or, equity if it's in a property, those types of things. So when you look at that and you look at the options that you have, trading and investing obviously falls on the right side of that quadrant, which is why a lot of people choose to invest in the stock market, right? It's why people choose to invest in real estate, because they want to have those, that passive income coming in either from dividend payouts from the stocks that they own, or from real estate income coming in from their properties that they own. So that's why, you see people always talking about be on the right side of the quadrant. So I like to typically talk about that first, just so you can kind of like have that foundation and just like lay that out so that people can understand, okay, this is why we do that. And I like how you're drawing that. This is really cute. Thank you for doing that.
Thank you.
I was looking at my own PowerPoint. So I didn't even know that you were doing perfect. Excellent. So with that said, this obviously this forum is always is mostly about real estate. So I'm not going to beat on why real estate is important. We're going to talk about this, that portfolio part that's going to include having your paper assets, right? Your stocks and all the other things. So why is it important to have that? Like we talked about on Monday, it's a good balance to have, right? There are people who invest in real estate that invest in stock, and people that invest in stock that invest in real estate. My background was in real estate before I got into stock. So I was like, you couldn't tell me anything else about real estate. I was like that person that was like, I was like loyal to everything real estate. But when I was introduced to stocks, it was a no-brainer. I was like, why not incorporate this to what I'm already doing in real estate? It makes sense to mesh these two together. And once you learn about, how you can actually protect your real estate assets, your physical real estate assets in the stock market by using things like options to protect if home values drop again like they did in 2008, it really does make a lot of sense to incorporate both. So had I known this stuff in 2008, the actual properties that I owned at the time, the ones that lost equity, I could have hedged and done something in the stock market to prevent those losses. So it would have been like a teeter-totter, right? Like this would have been losing value, but this would have been gaining value, and they would have either balanced out, or actually I would have made more money from the stock market because of how badly the real estate market crashed. Does that make sense? So that's kind of like how I really love the two of them mesh together. Now, obviously, it's learning something new in addition to what you already know about real estate or what you're trying to learn about real estate. But if you can do it, my thing is, why not?
We talk a lot about what diversification is, and Emily and I have a lot of, I love talking to Emily because we speak the same language, even though we're speaking with different accents, if you would, right? I speak in a real estate accent, she speaks with a stock accent.
Yep.
It was a business analogy. I get so much side-eye from this one over here. Anyway, so diversification isn't just having real estate, it isn't just having stocks, it's having different types of real estate and different real estate markets, and having different stocks in your portfolio that are performing in different sectors. Then you also have businesses and commodities and stuff and so on and so forth, so blah, blah, blah. But one of the best things to do, and this is where most people get started, is they do real estate and stock. Now, why is that? Well, real estate will hold. It's a slow asset. It's definitely a slow asset. Builds a lot of wealth over time. But it's a slow moving asset class. It's kind of like a battleship. It will get there and it will make some damage. Stocks are kind of like a sport boat. They'll zip around, do all sorts of crazy things. They're much more agile. You can react much quicker, but you're not going to, defend an entire country with them. I think I pulled that off. That makes sense.
And to add to that, the stock market is a lot more liquid, right? So if you think about the people that, let's say you have two different individuals, right? You have a real estate investor and you have the stock investor, right? Both in assets that, generate cash flow, whatever. They're both probably making the same returns or whatever the case might be. But when it comes to liquidating, right? Stocks, it's a lot faster to liquidate your stock portfolio to grab that cash when you're in a place where you need to get that cash. So for example, when the pandemic happened and maybe people got laid off and, before we had the whole CARES Act with all that stuff, if somebody needed capital right away, by the time you list the property and get an agent and get an appraisal and go through that whole process, that's usually 45 to 90 days, just depending on financing and all the other things that are going on. Where with the stock market, it's just a click of a button and those funds are back in your bank account within 3 to 5 business days. So when you look at those, it's good to always have liquid capital sitting somewhere, so that, because you never know where that emergency is going to come from. So it's a great way to have just money sitting somewhere. It's still growing in a sense. It's not just sitting there not collecting any interest in the bank, for example, but at least it's sitting in some assets that are paying you dividends and all that kind of stuff. I mean, it's crazy when you think about all the possibilities that are available in the stock market that people just, again, we talked about this on Monday, they just don't have the education or the wherewithal or even the law, the time to compare and contrast and really make an informed decision, right? So before we even get into like stocks and different types of things, the one thing I always ask people is, do you want to be an investor or do you want to be a trader? And you can be both. You can be one or the other or both, but there's two different mindsets when it comes to that. But most people typically want to start investing and then they want to, get to the point where they want to become traders. So if we're talking just plain investing, then you start with stocks. You don't have to worry about the Forex market or the futures market or anything like that. It's just, okay, I want to own an asset the same way the real estate investor would want to purchase a home. You would just go buy a stock, right? Now, whether you buy 1 share or 50 shares or 100 shares, you are now part owner of that company. Mm-hmm. So depending on the company that, what? Go ahead.
Right. Before we get there, what I want to, because you said something that made me think, okay, I love what you're doing here. So I want to, if you wouldn't mind, Emily, would you take us through, and you can take as long as you want to do this, take us through when doing invest, you want to buy a stock, what that means, and then what other markets are out there, because some people may not know, or they're not familiar with as many of them as you are. So if you want to just start investing, you just not be trading, but you want to start investing, you're saying to buy a stock, which is an asset.
Right. So there are 4 types of markets. There's the stock market, which is what a lot of people are familiar with, but bundled in the stock market, there are also mutual funds and what we call ETFs or exchange traded funds. So when we talk about stocks, mutual funds, and exchange traded funds, we're talking about the stock market, right? Those are, traded, from the hours of 9:30 to 4 o'clock. That's what most people hear about. So if you are an individual investor, you might own shares, of Apple or Amazon or whatever. If you have a 401k through your job, most cases, or in most chances, you'll have a mutual fund, which is a basket of stock and put in one basket. So it takes away the risk of just owning one particular company. By owning the mutual fund, you have a basket of stocks. So you can have a mutual fund that's all tech, or a mutual fund that holds everything real estate, or a mixed bag of small cap companies, and so on and so forth. So whenever you guys get that packet, from your employer that says, hey, this is your 401k stuff, go fill it out. in most cases, you're put into mutual funds, which is just a basket of stocks. Okay. The better product or the better version of those mutual funds, and we can talk about this another time, I can get really deep into that, is what we call exchange traded funds. So the difference between mutual funds and exchange traded funds, or ETFs as we call them, is just what you pay in fees, right? Those funds are managed by a fund manager at that institution. So if you have a 401k with Fidelity or TD Ameritrade or Schwab or whomever, when you're in those funds, they're managed by somebody, so that somebody has to charge you a fee to manage those funds. So the mutual funds typically are the higher priced funds versus ETFs, which are very low cost funds. Now, unfortunately, most companies do not provide ETFs for individuals within their 401k. That's something that you would have to check with your broker. And, we can talk on an individual basis, whatever you have or whatever, we can kind of talk about that. But those are the three main, products that you'll find in the stock market. You'll find the individual stocks, mutual funds, and exchange traded funds. And then we also have the index funds. I'll get into that in just a little bit. Then you have the options market. So the options market was actually created as a derivative to the stock market. So the options market is actually what we call the insurance product to the stock market, right? Because individuals who owned stocks, the biggest risk that they have is that stock going down, right? The stock losing value, having bad earnings or bad reports or going bankrupt or whatever. So the options market was created in the 70s as an insurance product to the stock market. So when people say that the stock market is risky or whatever, those are people that are just gambling and they don't understand what the market is. There are products that were created to protect people from when the market has these corrections or has these downturns. That's the options market. You can trade the options market by itself. You can trade the options market in conjunction to the stock market. So there's a couple of ways you can dovetail. When you start to dovetail the different markets, that's what we call like sandwich lease options when we talk about, real estate and stuff like that. So you can mix and match certain markets. The futures market is a 24-hour market, and that's the market now where we trade all the commodities. And when you think about, your gold, your silver, and all your food products, and produce, like everything you can think about, your corn, everything that you can think about in terms of commodities is traded in the 24.
I'm sorry, I think I misheard you for a second. Would you just say those examples that you just said? There was something I thought I heard.
So you have commodities. Right. You also have your produce. So like if where this is where like wheat and corn and all these things get traded. Exactly. So you have all that stuff that's traded in the futures market. Most people, most hedge funds will trade the futures market. Most individuals typically don't, but there are some that are that do trade the futures market. But for the most part, individuals like retail traders will trade the stock market, options market. Once you get to the advanced skill set, then you can trade the futures market, but they're just so high leveraged. It's not something that, I would recommend for somebody to go and start with because of the leverage that comes with that. And then, of course, we then have the Forex market, right? The Forex market is just currency trading, right? You're trading the US dollar for the Canadian dollar. You're trading the US dollar for the Japanese yen. It's just currency trading. This is just, currencies just being traded throughout. This is also a 24-hour market. This is where a lot of people start off with, but it's the highest leverage. So when you think about the leverage of like the stock, the options, the futures, and the Forex market, the stock market is 1-to-1. If you buy a stock for $1, for $10, it goes up $1, you make $1. It's 1-to-1 leverage, right? It's very low risk in terms of when you compare the risk. Options is 10-to-1. So for every dollar I have in the market, typically I'm controlling about $10 of an options contract. Futures contracts are about 25-to-1. So for every dollar I have, I'm controlling about 25. And Forex, it's 50-to-1. In some cases, it's even higher. Like if you have a broker outside of the US, it's higher than that. So for every dollar you have in the market, you're controlling 50. So there's that natural attraction to want to go to the Forex market because it's the highest leverage, but as fast as you can make it, you can also just as lose it. So for every dollar you make, for every $50 you make in the Forex market, you can also lose $50. So people don't understand the leverage when it comes to that. So I like to get people to just start with the basic stock, learn how to read charts, learn how to trade stocks, and then you can graduate to the other markets as you become more experienced and you have more understanding of the markets.
That's interesting. It's very similar to like, it's in a way, it reminds me of fractional reserve lending. You know, this much controls that much, and depending on
Right.
how far you go,
Right.
that's just interesting, which we'll talk about later. But
we'll talk about that. So now in the market itself, most people will hear, like if you're ever listening to the news or if you're ever watching TV or CNN or MSNBC or whatever, you'll usually hear them talking about, oh, the Dow Jones dropped 1,000 points or this and that and that and that. So the four major markets that are tracked are the S&P 500, the Dow Jones, the NASDAQ, and the Russell 2000. I'll explain what each of those is. So the Dow Jones is the oldest index, and it's what we call the Dow 30, or sometimes you'll hear them call it Dow Jones 30 or whatever you hear. But it's the 30 industrial companies. So when you think about this country back then, when it was just an it used to actually manufacture and produce things here. A lot of the companies were industrial companies, right? So when you think about your Boeings, you think about your IBMs, your Caterpillars, those companies, those are the companies that are in the Dow Jones, okay? But it's hard to track the market with just 30 companies. So the S&P was created, the S&P 500 now tracks the 500 large cap companies that are in the market. Okay, so that's a better barometer to measure what's happening in the actual economy and the actual market using the S&P because it contains the 500 companies. But most people reference the Dow Jones because it has the highest number. So when you hear, oh, the Dow Jones dropped 1,000 points, it's intriguing. It makes the news when you hear, oh, it dropped 1,000 points, but it only represents 30 companies. The S&P represents about 500 companies. Then you have the NASDAQ. The NASDAQ is mostly going to be your tech companies, right? So your Googles, your Amazons, your Apples, your Microsofts, all that stuff. That's where the NASDAQ, the NASDAQ is comprised of majority of the tech companies. And then you have what we call your small to mid-cap companies. This is what you call your small businesses, right? So the Russell 2000, that's what it's comprised of. It has about 2,000 of small to mid cap companies. So when we talk about the market, this is what we're generally talking about. Now, the markets are, so you can actually trade the index itself or you can trade the ETF. In most cases, so for example, somebody who's starting out, and we're talking about ETFs before, somebody starting out that's brand new might say, well, I don't know how to pick a stock. I don't know how to pick, how to compare, Microsoft versus IBM. They're both tech companies, but I don't know how to compare the both of them. Or I don't know how to compare Ford versus Toyota. They're both car manufacturers, but I don't know how to compare the both of them. Most people will start with the ETFs, which is that basket of companies. And you can just do the broad market and just buy the ETF of the S&P 500. So rather than just go buy, tech companies and an ETF of tech companies, you can just buy the S&P 500, which is comprised of real estate and banks and utilities and energy and all the different sectors. So most people will start with that. And again, as they get more education and as they learn how to analyze companies and so on and so forth, will then start to pick individual companies and start to buy shares of individual companies. But for those people who just want to keep it safe, but they want to be invested in the market, but don't necessarily want to take that risk of owning one individual company, they would start with the index funds. So the S&P 500, the ticker symbol for that would be SPY. So you probably have heard people talking about the spiders, right? The spiders is the ETF for the S&P 500. The Dow Jones, that ticker symbol is DIA. They're also called the diamonds. So once again, if you hear people talking about the diamonds, they're referencing the Dow Jones 30, but they're talking about the ETF of the Dow Jones. The Qs are the NASDAQ. So that's how we reference the NASDAQ. The ETF for the NASDAQ is the QQ. So again, they have different nicknames, but they all represent the same thing. So when you hear somebody talking about the Qs or the QQQ or NASDAQ was up, we're referencing that sector, right? And then you'll hear about the Russell 2000, which is called the RUT. That's the index for it. The ETF for it will be IWM. So you can essentially be invested in one or all four of these in your portfolio as you're getting started. And then again, once you're able to start to analyze companies and look at the fundamentals and understand what PE ratios of a company is, and whether it's a growth stock or whether, you know, it's a value investing stock, does it pay dividends, does it do all of those things, you can just, you know, start with the index ETFs because they also pay dividends as well. So that would be like the broad, like, okay, that's like the baseline of like where you get started. And then I talked about, you know, investors versus traders, right? So, but I want to focus mostly on just investing for this segment today, because again, that's where most people want. They just want to have an account that they can open and start, you know, whether it's an IRA or a Roth or whatever, they just want to start putting money aside to just grow that account for the future. Any questions so far?
Yes, you do have one.
Okay.
Let's see. Leanne asked, let me scroll up, can you explain the difference between broker versus a fiduciary?
So the broker, and are you talking about in terms of a broker like to trade, like a brokerage account? Okay, so so your brokerage account is going to be like, you know, your investment bank. So when you're talking, when you hear like the commercials that you see whenever you're watching like some business news network or something like that. So like you'll have like your Fidelity, you'll have your Schwab, you'll have your TD Ameritrade and all that stuff. There are other firms that act as fiduciaries. There are not that many. But there are those firms that act as fiduciaries, but when you open up an account with a broker, you're pretty much either going to have a financial planner or a financial advisor manage your account for you, or you're going to manage the account yourself. So whichever route you choose, just know that you obviously that when you choose to invest the money yourself, you have full control and you have full access to do whatever you want to do with that capital, but you need to be educated as well, right? And also, if you choose to hire somebody to manage your money, you need to still be educated because you need to be able to understand what it is that they're investing you in. So, you know, just because somebody says that they're a financial advisor, that they know how to do this and do that, you still need to know the markets yourself so that you can question and talk about things like, you know, hey, if another pandemic happens, what is your plan to protect my retirement if it drops another 20%, 40%, 50%? If you don't have that skill set yourself, you need to be able to, you know, ask the right questions with whomever is in charge of your finances.
And another good thing about, I'll take back on what you just said, if you're going to interview brokers, you want them to be able to explain it to you at a 6th grade level. If they are not competent enough to explain what they're doing to where a 6th grader can understand it, then they don't know what they're doing, and they're going to purposefully use words that will confuse you.
And it's not, and it's not to knock on financial advisors or anything like that. You know, they're licensed and they can only show you the products that they are obligated to show you, right? So they're licensed to protect themselves and the institution that they work for. So whatever limitations they have, they might know about about put options and how to insure your portfolio, but they can't talk to you about that because it's not allowed, right? So not to bash, you know, financial advisors out there, they're just doing their job essentially, right? They can only provide you what they are allowed to provide you with.
So Emily, just to follow up on that question, fiduciary, I got difficulty pronouncing that word. Fiduciary. I heard that there is, because I was in an event from Tony Robbins, some of the financial advisor recommend not to use broker if you can, because they are not working for your interest, because of there is a lot of, you know, management fees stacking up, so they're not working for your interest. So it's highly recommended to use the other one.
Well, again, we need to make sure that we clarify what the broker is. So when I talk about a broker, I'm talking about where you're going to actually put the money, the account that you're going to open to start investing your money, because you can't invest your money like at a typical bank, like let's say like a Chase or a Citibank or Bank of America, right? So when I talk about a broker, I'm talking about you opening up that investment bank where you're going to start to invest your capital. Right.
Like Schwab,
once that money in
Merrill Lynch,
exactly.
Those are brokers.
Those are brokers. So once that capital is in there, you as the investor have a choice to either be active in that account and do it all yourself, or you can then hire one of their in-house financial advisors to now manage that capital for you.
And those individuals had to be licensed, just like a real estate broker or agent.
They have to be licensed, but they can only put you in certain products. You might want to trade the futures market, but they can't do that for you. So there are certain things that they can and cannot do if they're going to manage the funds for you. Can you have multiple accounts where maybe some money is managed and then some of the money you manage yourself? Absolutely. But again, if you're going to let somebody else manage your money, you still need to be educated and be able to ask the right questions so that you can understand what is happening in your portfolio. Are they going to, if they talk about diversification, yes, they can put you in gold, they can put you in tech, they can put you in real estate and utilities and energy. But when the market goes down, everything goes down. So you can be as diversified as you want to be, but when a pandemic happens, it's still going to drop 30%, in a month. So nothing is protected just because your account is well balanced or well diversified. When I talked about the options market, those are the things that we use to protect the assets that we own. When we talk about the futures market, you can jump in. It's a 24-hour market where you can go in there and do other things outside of your regular account, where you can now hedge, and you can start to see, we talked about that teeter-totter where, yes, this one here is losing value, but because you have a skill set to do something else on this other side, it actually, gains you more than what you're actually losing on the
options you create more options for your hedging in multiple asset classes.
Right, exactly.
And something about the licensing as well, before I forget. So I was with a financial planner for 7 years, and that's actually how we started our business. I was doing the real estate side, he was doing the financial planning side with insurances and stocks and things like that. That's how we had our business model, and it was to literally show our clients how to hedge and what's going on. So let's first talk about the difference between a client and a customer. A customer is a general member of the public, all right? Every one of you is a customer to everyone else. You walk into a shop like, oh, that's my customer, great, awesome. A client is someone you have a responsibility towards. A client usually has signed a contract, or there's been an agreement, verbal or written, that says, yes, I want to work with you, and there's going to be compensation, or there's going to be some sort of business relationship. That's a client. When you have a client, you can have either a fiduciary responsibility or not. Fiduciary responsibility means that I have to look out for your best interest over my own. If I am a broker, I've got to look out for you before I look out for myself. I'm supposed to, at least. Not everybody does, but that's the idea with the fiduciary. Yep. Emily, I love you. So that's the way that goes on with the broker. Brokers can then hire other individuals to work beneath them. They're really employees. That's what financial planners usually are. Now, same thing with real estate agents. And just like agents and financial planners, there are some great ones, and then there are not so great ones. You want to understand what's going on where and why. Different portfolios require different strategies. For example, if you are just starting off and you've got $5,000 to invest, you need to be doing something different with your money that's going to build that wealth faster. That's in both real estate and in stocks. You want to get that money going and create cash flowing assets that will help build that nest egg up. Now, fast forward on the other side, say you've got $5 million in assets you have to actually implement. That's a different story. That's a lot more money that has to move. So typically those funds, again, with a battleship analogy, right? With those funds, they typically make a smaller return because it's a larger dollar value, because they are in much bigger asset classes that are riskier. In comparison to what they would do with a 5,000 smaller portfolio, right? The risk for it's shifted, but they also have more money, knowledge, and opportunities on this side. So you want to understand your goal is to get there, but you have to balance how you grow that. So you need to understand what you're investing in. So as your knowledge grows with what you're investing in, so does your portfolio, so you can keep up with it. A good advisor, any broker, whether in real estate or they're in stock or they're in commodity, whatever they are, a good one will tell you why they're doing what they're doing and what you can do to help. Does that make sense? If they do not want you interfering with what they're doing with your money, or if they don't want you asking questions, you gotta think about that. There is a surprising amount of financial planners that go bankrupt. Just saying. You don't want that going on with your money.
Yeah.
Okay.
Yep.
So
And
let's clarify that.
yeah, and that's a great analogy. I love that. So really what the financial markets, do for an individual, they really primarily do they do three things. And the first thing they do, and everybody, it's the one thing you should always be aiming for. It's obviously cash flow, right? Whenever you get into real estate or any type of business, you want to have positive cash flow. You don't go into business to have negative income coming in. So the financial markets are no different. When we go into the financial markets, it's because the number one thing I want to generate from the assets I own, the stocks that I own, is I need to generate cash flow from them. We'll talk about what those cash flow strategies are, not today, but just understand that the same way any real estate investor goes into a deal, into a real estate transaction, it's the same exact way we do it. So the financial markets, number one, allow investors to generate cash flow, okay? Number two, they allow you to protect those retirement accounts. Again, people that lost money in 2008 during the housing crash and the dot-com bubble back in 2000, and even as recent as the pandemic, there were ways that they could have gone into their accounts to buy insurance, which is what we call the options market, to protect those retirement accounts. Okay, so number one, we use the markets for cash flow. Number two, we use it for protection in our accounts. Number three, we use it to protect other assets outside of the financial markets, like real estate, like physical commodities. So if you own gold and silver, if you own the physical asset, you can't cash flow from having gold sitting in your safe or sitting in your vault in your bank, right? There's no way to protect that. So if gold goes down in value, then the gold bar that you have, or the ounces of gold that you own, or ounces of silver that you own, they depreciate in value. But you have that for a different thing. You're using that to hedge against the cash that you use and circulate all day long. But you still don't just have to sit there and just let that commodity depreciate. You can do things in the financial markets to protect those assets as well, including real estate and other types of commodities. So that's what we primarily use the financial markets for, is those two things: cash flow, protecting those retirement accounts, and protecting other assets like real estate and the physical commodities like your gold and your silver and all that stuff.
So
Okay?
what she's saying, this is why I love Emily. I'm like, yes, she's my other half of this. Like, she's the prettier, smarter, better version of me in all the ways. So I love you so much. I'm going to put it in another term, if you don't mind, about gold and silver, your physicals. Okay. So when we talk anything that's physicals, we literally mean the coins, the things you can hold. When you see GLD in the stock market, that's paper. You're actually still trading paper, believe it or not. Yes. There you go, Max. I was going to run and get mine, but you're fine. So your physicals preserve your purchasing power. Remember that. Physicals preserve your purchasing power. What do we mean by that? Well, let's be very clear. There's a dirty side of physicals. You always buy gold and silver, platinum and palladium at a premium. It's called spot price plus the commission for the broker. And you have to be licensed to sell those things. Well, no, you don't. I'm going to stop there. I take that back. You don't have to be licensed. Pawn shops, for example, you don't have to be. But if you get good quality mint condition, you typically go to a gold and silver broker or dealer. Now, you buy it at a premium, and you usually have to sell it at a discount. So is it the only way to invest? No, that's absolutely nothing like we teach you guys. We don't want you doing that ever, except for things like right now. So why are we looking at that? Well, if you notice, if you start following the financial markets, gold is going up, silver is going up. It's finally breaking the thresholds. I don't remember where it is today, Emily. I haven't looked. I'm sure you probably have. But
of course.
Where's gold right now? So hold on. I bought my gold at $1,490, I want to say.
All right,
so,
gold
and
right
that
now,
was a year ago.
gold is at 1,800.
1,800. So in other words, really, is it 1,800?
Yep.
1 second. Let me see what I'm doing here. Let me just move. This is more fun this way. 1,800. I had 1,490. which means I made $310. Okay, divide that by the $14.90 that I had in there. That I made a 21% return on my investment in a year
And
by literally holding it in my closet.
Silver is sitting at 1980, so might as well just call that $20. Yep, silver is sitting at right around $20.
I bought mine at, I think I bought mine at 17. Not a huge gain there, but it's silver. Now, things you want to learn about physicals, and we'll do another conversation on this, but physicals are what you're going to use for bartering ability. You can pass physicals on to your heirs, right? They come in different forms. When I was in India, I was amazed to see that they wore their wealth in their bangles. Like, that's solid gold. And that's how they would tell how wealthy the family was. If you have a gold necklace with a pendant on it, that could be worth, it could be several ounces of gold. It could be worth $5,000 and it's 1 ounce of gold, blah, 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 depending on when you bought it, blah, 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 and the type of coin. But in customs, they can only claim it's worth what's printed on it. So if it only says it's a dollar gold coin from when I minted in 1938, well, guess what? They can only say it's worth $1 because that's what's printed on it. Although in reality, it's worth $1,800 today per ounce. Do you understand what I'm saying there? So again, it's a way to preserve your purchasing power. All right, so as I grow, I'm gonna do that. We only really, a gold rule of thumb is you only want about 10% of your net worth in physicals, because first of all, it can't hurt you. All right, now, but it can help you. Silver buys day-to-day objects. So we say gold buys ground, silver buys grub. So if you have gold, because it goes up so much greater in value and it's more precious, that's what you're going to use to go buy your real estate or buy buildings. You can actually put gold contracts in your residential real estate leases. Most people don't know that. Boom. This is why I do what I do. Silver, well, you're going to use that to go and buy like your groceries, or if you want to go and buy a car, because it's smaller denominations, so you can break it out and get closer to a bartering ability. The last thing we're going to talk about with physicals, which people don't think about, are your barterable items, such as your grandma's brooch that has emeralds and gold, right? The sterling silver tiara that your mother won in her beauty pageant. It's the watches and things like that that you see gentlemen wear. That's why Rolexes and Cartiers matter so much. It's the barterability that withstands purchasing, that holds your purchasing power. So you want to understand why, when we talk about physicals, what to look for. So now that I've completely derailed you, Emily, I apologize. Back to you.
Okay, you're fine. So one of the questions that I always get a lot is that, is what does trading require? Like, what do I need to start, to start how to trade? Well, first thing you'll need, I would prefer that you have either a computer or a tablet, but you can trade on your phone. It's just, when you're looking at charts and you're looking from it, from a phone screen, it's just, a little bit harder to analyze, but it's totally doable. Like, the young people, they do it all the time. So I'm not against that, but, you need either a computer, a tablet, or a phone. Obviously you need internet access. You need to be able to look up charts and look up real-time data. So you need to have internet access. You need to have that brokerage account open, right? So when you open up an account, I want you to open up an account, open up a brokerage account with a broker that also gives you access to paper trade, because when you're brand new and you're starting something new, you don't have any business going to put any of your real money into the markets if you don't have any education, right? So you want to be able to start to paper trade first. So that brokerage account, when you open it, typically most brokerage accounts also come with that virtual account or a fake money account or paper trade. They all have different names, but they all mean the same. But that's the account where you get to, to practice how to click buttons, how to find the buy button, how to find the sell button, how to type in the ticker symbol. That's where you get to practice all of that.
It's your PSAT before you take your SAT.
Yes.
I'm trying to use college analogies, for
yes, exactly.
education.
I love it. And yeah, so because and once you get that account open, the next thing you'll need is education, right? So you need to get your butt in that seat. You need to start learning the concepts and the principles of trading and all the lingo and all that good stuff. And then what you need the most, I think, after the education is that community and support, right? you can go lock yourself up in the basement and read all the charts that you want and learn how to trade and become very successful. But it's just more fun when you're in a community, when you can actually reach out to people and ask questions and get help and get the support that you need and have somebody talk you off the ledge. I think you've heard Jake and I talk all the time, like, we're constantly calling each other because, he wants to buy something and I have to talk him out of it, or maybe I want to get into something and talk me out of it. So when you have that, that partner or community that you can actually reach out to, because trading really is just a mindset game. It's really the space between your two heads, right? The picture is there, it tells you what you should do, but your emotions get, it's your money, you're emotional, and you need that community, that support system to talk you out of the dumb things that we sometimes do as traders, because, we just like to click buttons. But sometimes we click buttons way too much. And we have to pull back a little bit. Yeah.
There's actually a release of dopamine in your ear when you make a trade, or like when you put any offer in, there's a release of dopamine. It gets addicting.
I like that ding. Every time I buy something or sell something, I like to hear that ding on my computer. So if I don't hear a ding like every half an hour, I'm like, okay, what do I buy next? What do I buy next? So I have to walk away from the computer, or I have to be in a platform like this and talk to you guys so that I'm not looking at my charts or on the phone with somebody else. So, there is that excitement and almost, kind of like addiction to trading and investing. But it's much more fun when you're in a community of people where you can get support and, reach out when you mess up. I mean, we don't judge each other. We talk about all the mistakes that we've made, and everybody's going to make those mistakes. You're going to start trading, and either you're going to be one of two people. You're either going to start trading and make money really fast and think that you're a genius and ignore every rule.
And that's the worst thing to happen, by the way.
Right?
You don't want to be that
That's
person.
the worst thing to happen. Or you're going to start and you're going to have a couple of losses, but if you have somebody to talk you through and just encourage you and do all that stuff, and you keep doing it and showing up and learning and doing all that stuff, eventually you'll get there. But those are going to be the two outcomes. And either way, you're going to need somebody to be there to support you, because the highs and the lows of trading are real. It's just like any other business.
There was a story I want to say 2 weeks ago, it might have been 3 weeks ago, about a guy, a 19-year-old who started trading on Robinhood, which is a platform that you can, well, Emily will tell you her opinions on it in a second, but he started trading a very small amount, grew it incredibly quickly just by clicking buttons, right? No actual financial education. There's a delay when you make a trade. There's a delay where it hits your account, and it's usually the next business day. Well, he made a trade that lost money on Friday. Had he had financial education and looked at what was going on, his account would have reflected something different on Monday, and he would not have thought he'd done such a bad trade. He lost $300,000. And at 19 years old, he didn't have the emotional maturity to take care of that, and therefore took his own life. Wrote a letter to Robinhood, blaming them for his mistake and for misrepresenting things, and then unfortunately.
And those are the things we talk about, the leverage, the margin that comes with that. If you don't understand all those things that come with that, and what if I can remember the story correctly, I think he was selling options or selling, he did something, either he was shorting or selling something, and it showed a negative amount on his account. But that's how, when you short or when you sell something, that's how the account settles. So eventually it would have cross each other out, but the kid didn't understand leverage or margin and all that stuff, so it was unfortunate that happened. But that's the key to education. It would be as if somebody goes to do a real estate deal and gets a hard money lender, doesn't understand that those interest payments are high and they're due really fast. It's not like a 30-year loan or a 15-year loan through a traditional lending, and then you have to pay up all those dues right away, and you don't know, so it's just having, again, just basic education and knowledge to be able to understand the financial markets, because those numbers get up there fast and in a hurry. But so that's what you require in terms of that. And then the next thing people always ask is, how much does it cost to trade or invest? Well, I always say this, you can either pay somebody to teach you how to do it, or you can pay to the market, right? So you need education. You can't avoid the education part of it. You can YouTube University yourself and go out and find all these different videos on YouTube University. But again, like I said earlier, if you don't have that support system where you can reach out and get, to talk to somebody and get that one-on-one support, the chances of you still trading a year from now, 6 months from now, are very, very low. So it will cost you something to get education. You can go as far as getting mentorship or coaching and getting those one-on-one sessions and all the other good stuff. you can do subscriptions to different, you know, to different websites where you can get, you know, there's some subscriptions that are free, some of them are paid, and you can, you know, if you choose to go that route, then you'll pay subscriptions for certain websites. And then there's the cost of commission. Now, commissions are not as high as they were even 9 months ago. You know, we can credit Robinhood for one thing, you know, because they were commission free, it almost forced all the other brokers to go commission free. So even if you open up an account with one of these retail investment brokers like your, you know, your Schwabs or your TDs or whatever, the commissions are free when it comes to trading stocks, right? There's still commissions on options, but it's still also very low compared to what we were even paying 9 months ago. So the cost to trade and invest is way, 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 way less than, you know, what it was 9 months ago, 20 years ago. I mean, before, you know, people used to pay like what, $150, sometimes even more than that, just to buy shares of Coke. So you'd have to make Coke you'd have to hold on to Coke forever just to be able to just cover the cost of commissions, because you have to pick up the phone and call a broker to make the transaction. But now it's 2 seconds on your computer, less than 2 seconds on your computer, and the transaction has gone through and it's commission free. So it's because of technology, it's becoming more and more not easy, but it, you know, the cost to learn how to trade is becoming less and less as technology gets better and as information gets out there. It's just a matter of finding the right information, applying that information, having a good balanced portfolio, not over leveraging, and all the other crazy stuff that goes on with. And then once you get started, people always want to know, well, how much time does it take? Well, you have to set some time to learn how to trade. So you have to set time to get the education. Then you have to set time to actually apply what you're learning, right? So it's one thing to sit down and understand what a stock is. It's one thing to actually log into your account and paper trade and buy a share of something. And then there's trade management. When do I get out? When do I take my profits? When do I do all that stuff? Now, a lot of people will automate that stuff so that they don't have to be sitting in front of a computer to do that when that actually happens. But, you know, some people who are just home, they like to day trade and they're in and out and they move on and they go on about their life. So how much time that is, you know, it's whatever time you have available, but obviously, you know, have a dedicated, you know, time set aside. If you're going to do this, then let it be that same time every single day. If you're going to do an hour a day, then, you know, make sure it's that 1 hour a day. If it's going to be 5 hours a week, spread it up, you know, spread it evenly, and just be able to just get that education and then apply it. And then, what was that?
Be consistent.
Yeah, be consistent with your time. It's kind of like, you know, how you guys do here with the investor party. You know, you have your times. We know at 3 o'clock every single day, we're here on Facebook Live, Monday, Wednesday, Friday. And then in the evenings, you have your classes there too. So it's just being able to be consistent with that and sticking through with it. Even when it gets difficult and you don't understand certain concepts and all that stuff, just, you know, just stick through it. And then, you know, then the rest just comes as you go along. So that's my little spiel on getting started in investing. The clicking the buttons will come eventually, but I think it's much more important to understand the fundamentals of why it's important to have all these things in place before you go out there and click those buttons. Because again, anybody can click. My son has clicked buttons and bought shares of Apple. Anybody can do that. It's understanding the principles and the fundamentals of how to analyze and find good, you know, companies that are, you know, dividend paying, whatever vision or whatever plan you have for your investing, you can create that. But, you know, we're going to spend some time looking at those companies and analyzing those companies, looking at their fundamentals. You know, we have to do comps, like the same way we do comps in real estate. You don't just go buy Amazon just because you want to buy Amazon. You have to understand what Amazon, the book value of Amazon. Are they making money? Are they losing money, right? So those are things that a lot of people don't spend time learning. But that, if you want to learn about that, you know, Uncle Warren, we call him Uncle Warren. Warren Buffett is a great example if you want to learn about value investing, on how to find those good dividend paying stocks. Right now, they're not the best. They're not paying out anything because the market's just been ripping. But over the long haul, they've proven to be the ones that work because, you know, they pay you dividends. And, you know, those companies are, you know, the likelihood of them going bankrupt and all that stuff because they have a good PE ratio are slim than, you know, jumping into, like, you know, these up and coming companies that we have no idea what they're about and that kind of stuff. So you just kind of like have to wait and see in terms of that.
So that's actually, you brought something that I think is very interesting because we haven't talked as much about that, which is you want to know where you want to, what did you use? The bigger picture of what you want to be as an investor, who you want to be, what you want your portfolio to look like. So did you make money? Oh,
no, the ding was the market close. That means I'm not done. I can't click buttons anymore.
She's off now. Tomorrow. This is the time where she can go have herself a glass of Chardonnay. She's fine. Yeah. So that's something that you guys should be looking at is, okay, where do I see myself? How do I see myself as an investor? What do I see myself growing towards? What am I looking to do? And it's going to be different for every single person. Okay. Some of us just want to be able to retire where we are and maintain our lifestyle. Some of us want to retire wealthier. Some of us never want to retire. We just want to be able to keep growing and then pass what we build onto our families. That's what like Rockefeller has done and Chase family and Rothschilds. Those are very interesting people to learn about if you haven't done that yet. But the thing is, it's not, if you invest properly, this is going to sound crazy. When you invest properly, you become immortal. It sounds crazy, but that's what happens. That's why we call it legacy investing. If you invest properly, you become immortal.
Yeah.
And there's no wrong way to start. You just end up jumping into the river and going with the current. Doesn't matter where you start, just jump in and go. But you need to make sure you have a life raft with a community, a mentor, education, and learn all the time.
Yeah, and there's room for both. You know, you don't have to pick one and stick with it. You can do value investing and pick those good, you know, dividend paying stocks. I own a couple, you know, your AT&Ts and whatnot. AT&T does not move. If you're looking for a high flyer, don't go buy AT&T. It doesn't move much, but it pays a very nice dividend, right? 6.9 something percent a year is not bad. That covers inflation. If I had that same amount of money in my bank account, I'm not getting 6%. Right. So when you think about, when you look at it in those terms, you know, yeah, it's good to have those value investing companies, but you also want to have a high flyer like a Tesla or whatever, those growth companies that, you know, the companies are still brand new, you know, but you believe in the innovation of where the company is going and what it's going to do and all the other stuff. So it's, you know, you can have both value and growth stocks. You just need to be aware of what you're investing in. So if you invest in a growth stock, you're taking a much more a higher risk investing in a company like Tesla than you are in AT&T, right? But you need to understand that. But a lot of people just do it without understanding those concepts. They just buy because they saw a headline on their news feed or, you know, on social media, and they just go buying and clicking buttons without an understanding. You know, I was talking to you guys. I was talking to you about this last week. Yeah, with the company that you know, Hertz was filed for bankruptcy, and people are sitting there buying Hertz. I'm like, the company is like, you know, filed for bankruptcy. Like, you know, it's like it's done, but people are, you know, they're investing in it. Why? I had no idea. So it's just again, just getting the education. Don't bypass that part of education. You know, it's the most important part. And if you want to be trading, you know, and investing 5 years from now, then just do it right from the get-go. You know, there's plenty of opportunity. The markets are, you know, have been around forever. You know, you'll still be able to trade Tesla 10 years from now, Amazon 10 years from now, Apple 10 years from now, but do it right.
And it's interesting because you do want to have multiple comps that you're looking at, because remember, people were heavily invested in Kodak. Do you remember that company? They were huge. They were everywhere. They're not anymore. Polaroid, actually, Polaroid
can't have all your eggs in one basket either. No. So, yep.
And like GE, that's doing some weird stuff, but we'll get there. We'll talk about it later. So what I want to do on Friday, guys, we're going to be talking about cryptocurrency. Oh my God, it's everyone's favorite thing to talk about, which is actually, it's very interesting, actually. So we're going to be talking about that on Friday as well. Emily's going to do her market update because that's what she does. She's brilliant. We love her. She's got such a great way of explaining these things. But we're going to be talking about crypto and how that balances into everything else we're doing and what to look for. So again, we're going to be having Emily creating our Stock Survivor course on Investor Party. So she's going to be taking people, like she's doing with Matthew, although I can't get his ass to sit the hell still. Anyway, she's going to be taking everybody and teach you guys the basic fundamentals of trading and get you guys starting. It is going to you guys start how to set up, literally how to set up your brokerage account, how to start your paper trading, how to start running comps or everything. And then you start doing it together, and you're in turn going to be building that community of trading partners that she was talking about to keep you from going crazy, because some of y'all are nuts. So if you're interested in learning more about what we're doing with Stock Survivor, we are going to be having our website, our landing page up on Friday. Therefore, you guys can go in and sign up, put your information there, and we're going to get that moving. So a week from Friday, we'll actually start all of Stock Survivor. So exciting.
And just another shameless plug. I talk about a community, and I belong to one wonderful community. And tonight we're actually doing a free webinar on YouTube on how to protect those portfolios. So if you guys are not doing anything tonight at 7 p.m. Eastern time, I just put the link on, I just sent it to Jacob privately.
Yeah,
I'll do it again. So that everybody else can have it. You guys are more than welcome to come in. It might be a little bit over your head, but again, the more you just immerse yourself in it and just listen to the lingo, the more it will start to make sense, eventually. So you guys are more than welcome to come and join us tonight at 7 o'clock.
That's actually something I wanted to mention as well. For those of you, if you're just learning this stuff, again, I want you to understand that investing, when you're starting to learn how to invest, real estate, stocks, whatever it is, it's in the same part of your brain as learning a foreign language. Okay, it's literally in the same part of your brain. So if you think about how you learn to speak English, you don't remember, do you? Because you were just absorbed in it, right? So your body, your mind started to take on habits and features and characteristics of the environment around you. Guess what? The same thing is going to happen here. That's why when you're saying that if you ever say you're overwhelmed, you don't understand something, that's supposed to be that way. That's how our brains are conditioned. Some people pick something up faster than others, so you'll pick up some concepts faster than others. For example, I love lease options. I'm a creative individual. I have a much easier time learning about options trading, which is apparently harder than what stocks are. I don't know, but that's just what I'm gravitating towards, right? I remember that Emily and I had a very fun topic about that one time. So like, at times my English is not good. That's funny. But you just want to make sure you know it's in there. Just immerse yourself. It's going to start clicking. There's no magic pill. There's no book to read. There's no just one thing. It's the act of investing that's making a difference. All right, so I want you guys to be patient with that. So Friday, we're going to be doing crypto. I'm going to see if Jake can join us as well. Emily, I'm not sure if he will, but we're going to try it. We're going to have the Stock Survivor website up on Friday, so you guys can actually go and sign up if you're interested. That's just our interest page, no commitment for it yet. But you're going to go there and you're going to get a free download as well from Emily. And then we're going to go ahead and start really finalizing out for the following week. The enrollment will not be open for more than 7 days. We are only taking, depending on how many coaches we have, we're either going to have 1 to 3, and we're only taking 5 people per coach. So right now we have a 5-person cap because we just have Emily, but I think we're going to get Marie and Sylvia or Jake involved. So we will be taking up to 15, all right, if we get the coaches to cooperate with us. So first come, first serve. Yes, there will be a charge for this. No, I don't know what it's going to be. We're working all that out. We got to pay Emily for her time. So it's a lot. It's a lot to do. When you put these things on, it's a lot. I had no idea.
It's a lot of work.
Sweet Jesus. All right, guys. You're amazing. Well, I love you. We've taken enough of your time. Go have a great day, and then we will see you on Friday for Crypto, Real Estate Survivor. Tomorrow, you will be on, again, 8 o'clock, and we'll be showing your next steps. So, Leanne, to see what she says. Emily, you are a great teacher. You opened up my mind today with the foundation introduction. Oh my gosh.
Thank you, Leanne. I appreciate that.
Hey, let me be very clear. Leanne is a smart cookie. She doesn't just get praise. Yeah. She's helping me with my Amazon store right now.
Awesome. Well, thank you guys for your time. And if you guys have any questions, always feel free to reach out to me. I'm on all the social media platforms. You can follow Women in Trading. You can follow my individual pages. So I'm here to help you guys out whenever you need it.
And we're going to be putting on Investor Party, there's going to be an icon that is trading. So you're going to see something for Emily. I think we're going to call it, well, it was going to be Women in Trading, but we're going to be anyone in trading.
Something. Anyone in
trading party. Trading party. We're doing that one. Make it happen. So
we'll figure it all out.
But yeah, we're going to get together and figure out how to spice it up a little bit for our presentation. get excited either way.
I pretty much just say things are going to happen, and I leave it to Nelson and Elise and Emily to make it so. So, yay. All right. Love you guys. I'm out. Bye. I'm going to pee.